And marketing, let's save anything online.
They're not hearing us, so
Hello.
keep doing your thing and I'll get it fixed.
Okay. Who has background in finances here? I would say finance, not like a finance degree, but like you have a budget at home. No. And like, so you've handled money before. You've handled money like a job. I've seen like some head shakes, yes. What makes it a muscle?
I mean, I worked at Chase, and so I did, but it was more like credit cards. But I mean, it was definitely a financial based job. So
Yeah.
We're all horrible. That's why we're here, Blake.
No, it's cool. Like, I want to know where you guys are, because we start with the very, very basics. You guys can be like, because we've tried to figure out how to make this class as valuable as possible. So basically from this class, we've got a survey for you guys at the end. And if you guys do fill that out, we will then build out other classes so that we can just dive deeper into the things that actually will help you be of value. Yeah.
What the recommendations would be for like savings. So whenever you do get your first couple of closings, how much you should save to kind of prepare like a nest egg for just in case on those not so stable months.
Sure.
how much do you pay yourself? Ooh, that's a good one. Good question.
You. This is a good list. Anything else? We can keep adding to it. We have 2 hours. You guys have 2 hours to talk about finances. We've got plenty to talk about.
So this is going to be recorded.
It is.
I can be brave.
So why don't we introduce ourselves?
Oh,
Because
sure.
there's people in here that don't know.
Sure.
Yeah.
Okay.
So I'm Rachel Lusk. I know a lot of you in here, but I know there's a couple new faces in here. I am the Market Center Administrator for our office. So what that means is I handle all the operations and financials for our brokerage, which we have over 350 agents, and we have a lot of commission dollars running through there. So my main role is to make sure that we are profitable every month so we can profit share back to our agents and we're keeping our expenses in line, along with making sure that the lights stay on in the building and everyone can operate and use their building efficiently. And so I'm really excited to teach this with Blake because Blake is the ALC Financial Chair this year. And being in my role and meeting with so many agents, a lot of these questions are what I consult with our agents on a daily basis. I remember my first year, we had an agent that did not save for taxes because they were used to being a W-2, not a 1099. And then they get a $50,000 tax bill and have no money saved aside. And that was one of the hardest, and I'll never forget the conversation, the tears, all of that of what am I going to do? And so that's why I'm so passionate of talking to our agents about this, because one, it's really cool. Now you are a business owner. You're not just a real estate agent. You don't just have this little side gig. You are a business owner. And so how do we empower you with the knowledge and information to go out there and run your business like a true business? And it can be really scary. And we're hoping after today, we can help break it down a little bit more and then build this out. So you've made a lot of money. Great. Now what do you do with it? Because you can have a lot of money coming in, but are you actually making money on the bottom line? And so that's what we're really wanting to focus on too. You are.
I'm Blake Cook. I'm the team leader of the Property Gurus. We sold 138 deals last year, so we did 138 transactions. So that's a lot of income coming in. That's a lot of figuring out what goes where and how you spend it. My background is not in finance. When they asked me to be the finance person, I was like, I don't know that I'm your guy. I think that needs to be somebody else. But turns out it actually worked out really well. So what I want you guys to take away from this class is know that you can absolutely learn the things that you need to learn to do this because you are a business owner. And when she said that if it didn't get a little weird in your stomach, didn't make you feel a little strange, then you need to really evaluate what you're doing because it should make you uncomfortable a little bit because it's a big deal, which is really, really cool. So to the skill piece, who has a personal budget? I want to start right there. Who has a personal budget at home
I like
that
that
can
you
prove
say
it?
like you.
You can prove it if I ask you to, and I'm not going to, but you can prove it.
Yeah.
Can I?
I mean, I have to go home and get my Excel spreadsheet, but yeah, I do.
Did you build it yourself?
Yeah.
Good for you. Good for you. I wish I
Jonathan,
could.
you have one?
Oh, that's really cool.
And paper.
Old school. You update it every month. Well, and does anybody else? No, so no one else. There's the only two that are rocking it. What's the aversion to a personal budget? Asking from somebody that's only had one for like a year and a half. So there's absolutely no judgment.
I don't know how to do it.
Okay.
You know, I pay everything with credit card because I'm from South America, so I travel back and forth, and that's how I get my tickets for free. But this is what I tell my daughters: charge everything if you know that you cannot pay that bill in full, don't charge it. That's my motto.
Thanks, man. Also transparent. Love that.
I lack the organization, honestly. I mean, I know what comes in, what comes out. Majority of my bills are on auto pay, and I know that I've got enough in there, but I'm not conscious enough exactly how much I'm saving each month, things like that. So.
Yeah. So if you guys don't know how much money you need to run your household, which is the purpose of a budget, right? So it's how you know how much keeps your lights on, how much what Rachel does with this building. How can you know if your business is giving you enough money every month to keep everything rocking and rolling? Right, so like the gut punch of how nasty it is if we haven't started there, that's the first place to go. And it's really easy because you can go to your bank account, you can see what you're spending where. My wife and I were so financially illiterate when we started. It was literally, we loaded up QuickBooks. We attached our personal accounts to QuickBooks just so we could track what money went where. So if you can build like an Excel spreadsheet, that's awesome.
Yeah, I had to do the same thing, but I had to do everything on like my own side. Like I went down and every time I went to McDonald's, right, I gathered all that information because in order to start this, I had to stop my old job because I am a full-time father. I needed to make sure that my priorities were straight. And so I had to really figure out, okay, well, we need to cut $350 out of our food budget every month. How are we going to do that? Well, Chick-fil-A's adding up. And so like, I had to add all that up. And then I also put all on my same spreadsheet where my debt is. And every time that I pay off my debt, I check and see what is my principal left. And so I have that. And so every month I get to see, okay, we paid off $1,200 worth of debt this month. It's nice to see that numbers slowly dwindling down. And so
Sure. What was your name?
my name's Logan Deal.
How many people want to do what Logan just talked about? Nice, right? Like, oh, that's a lot. That's really cool that you do that.
Yeah.
Did somebody teach you how to do that, or did you just kind of?
I have some good people in my life who's always like stressed financial literacy since I was like 8. So
Cool.
I guess I would probably accredit them.
I think one of the things when I think about making a personal budget, especially like in the meals and entertainment, I'm always undercutting it. 'Cause I'm like, I don't spend that much going out to dinner or doing these things. So when Trey and I blended our finances, what we did is we said, because we're credit card people too, we want the rewards, we want the travel points, all of that. We have 2. And so one of them, we just this last month, we said, this is all going to be our normal monthly expenses. Everything else on this other card is going to be those other one-off things, because we're obviously paying for a wedding, so that wouldn't really fall into our budget. And so that's an easy way for us to split it and track it that way. And so then at the end of the month, we can go and say, okay, what did we really spend in meals, entertainment, other extras that we kind of discount on our budget. I love food. And then we can look at it the other way. And so even if you don't have something, that's a simple step to get started. But I love how you're looking at it every month. And that's what the Market Center does every month. That's why what we call transmittal. We're closing out our books every month and we're balancing it to see what we hit in each of those accounts. So then we can profit share to the agents. And that's something just part of KW that we've taken into our own personal lives as well on a monthly basis.
Yeah, because like, how long can you guys stay in real estate? Who's been in real estate for like less than 6 months? Perfect. Less than a year. Cool. Well, I guess 6 months to a year, maybe? A year to 2 years. Okay, very cool. So, Hannah, you said you have a budget? Kind of. Okay.
Well, we like budget at the beginning and we kind of look at like how much we're gonna be spending on like to live, like our utilities, our mortgage, all of that stuff. And then from there, just to make sure that like each month we know what we have to do, and then everything else we kind of like, as it comes in, we allocate it. We have different like percentages that we allocate to different things and stuff. So not really like something that is like in a spreadsheet, we type everything in, but I don't know. It's kind of like a loose budget.
But that's totally
Something.
fine.
Yeah.
Like, and that's what I want everyone to see is he's got a spreadsheet. He does this. You're doing yours manually, which is wild to me. Good for you. And then you got a loose one. It's percentages and it goes places. You just have to do it. Because I really want to drive this home somehow, because especially if you've been in the business less than 6 months, how much money do you need to make sure that you can make it a year? If you've been in it from 1 to 2 years, how much money do you need to make so that you can be in it for 2 to 3 years? Somebody have a guess? Do the people that have a budget have a guess?
Realistically, as far as like an annual, I would probably need somewhere at least north of 40,000, including my spouse's income. And that would be to not only meet ends meet, but to also be having money set aside for investments, having a 6-month nest egg, things like that.
Cool.
Christy said 50,000 online. So
50.
that's what she would need.
So if you don't have that baseline start, like this is literally step one, nothing else that happens today matters until that's done. It all matters, but like, if you don't know how much you need, you're just going to be spinning your wheels and you're going to come back to the next one, you'll come back to the next class, you'll go over and over again. If there's one thing that you guys take from this, it's like, just go start a budget. Track it, add your receipts, do whatever you need to do. So you know, okay, I actually need $25,000 or I need $80,000 a year. Because when we treat this like a business, which we're going to get into in a second, you're going to find you're going to need to sell a lot more than you think you do to actually make those numbers happen, which is why I think the turnover rate is so high. This is something that Rachel and I have in common. We want to see as many people stay in this building and in real estate as we can, because real estate can change your life. You just have to track it, which sucks because most agents don't want to track it.
And if you don't know where to start, I actually have a template for a personal budget through one of my maps models classes I've been through. So I'm happy to give copies to that, and that's where you guys can start. It just gives you an outline of what you can do.
Can someone tell me why number one is important for one from it?
Well, you gotta know what you're saving or how much you need to make in order to not go negative every month.
You need to know how much you need to make so that you can stay. So you don't have to go get a job. The reason you're here is because you want to run your own business. If we don't start here, you have to go get a job.
And the really cool thing about this is, what is the lifestyle you want, right? So you have your bare bones, like Hannah had said, but then if you're having this lifestyle you want to live, great, let's achieve that. And let's just realistically adjust our goals so we can get that as well. Doesn't have to be the bare minimum, but you know the threshold and your overarching goal.
Okay, what would you like to jump into next?
How do you find out if you're winning or losing?
Okay, so that is, I'm going to try and say it in one sentence, but you talk a little bit about it first. Because what I want to say is really intense, really fast, and probably shouldn't go right away.
Okay. So just like in the personal budget, that's how you can find out if you're winning or losing. But I know you guys had mentioned, how do you set up your business, whether that be an LLC, because we can now pay you in your LLC, which is new. Previously, we weren't allowed to do that. So getting an LLC set up is the next step. What I see agents doing is they take their commission check. They say, yes, great, I have my check. They put it in their personal account. And then you're kind of commingling your business funds with your personal money. And then are you really tracking that? So we have a one-page sheet upstairs that you guys want that will show you how to set up an LLC and how to get that registered. If you're doing it for yourself, I've set up a couple of LLCs for myself. It's pretty easy to do for one person. Now, if it's multiple people, that's when you probably want to consult an attorney to do that. But when you're setting it up for yourself, your operating agreement's going to be, I am the owner. I get 100%. There's templates online that you can easily plug and play into that and get it. So setting up your LLC to then setting up your business bank accounts are going to be very important. So you're taking your commission check and putting it into your business bank account, and then we can learn about how you pay yourself a salary. So you're treating yourself like an employee of that. Now, as far as LLC S Corp, that is truly going to be like a CPA. And everything, like Blake said, I want a disclaimer. Even though I've been in this role 5 years, I'm still not a CPA. The CPA is my checks and balance for the market center wise. So we will give you things that we have heard, learned, and yet consult somebody else that actually has the degree in doing that. My 2 accounting classes in college would not certify me as a CPA, just disclaimer.
Who can tell me what an LLC is?
Limited liability.
Limited Liability Corp. What does it do?
Separates you, the person, and you in your business.
Why is that important?
If someone sues you, they're suing the business, not what you own.
So how do you protect the things that you own?
Keep them in your name and keep your business, what's your business and yours separate.
That's right. So when we say that you pay yourself every month your salary, it is a draw that will go from your bank at your business account to your personal account. That should be the only transfer that happens. Because there's what they call piercing corporate veil, which is basically commingling funds, which means that they can get a hold of you. Now, this is something that took me a long time to understand. Having an LLC, what does that do for you tax-wise? So we know that it protects you, right? So that's the liability piece. What does having an LLC do for you in a tax from a tax standpoint?
Prevents you from paying taxes twice, depending upon which entity you go with, right?
Yes. Just an LLC doesn't do anything for you from a tax standpoint. You have to take an election, which is what Hannah's talking about with an S Corp, a C Corp, all the different corps, and there's 1,000 things that go along with that. But until you elect a special thing on top of the LLC, it doesn't do anything for you tax-wise. Because in the tax world, you guys are taxed as a real estate professional. And that is really, really big because we both invest in real estate here. And whenever you get into making the money and then saving to invest the money and then investing the money, that little part of the tax code is so helpful for you. I'm not going to get into that. You should go to like Trey Watson's wealth building stuff because that's so you can learn how to use that. But you create the LLC that protects you from a liability standpoint, not a tax standpoint. Okay, that makes sense. Any questions on that? Good, because that took me like 6 months to understand. So.
Sharing my knowledge.
Awesome, good for you guys. So with the second step is going to be we're all take profit first. Easy anything before profit first.
Do that.
And we're actually going to do this. You guys have pen and paper at all? I see some of you guys do. You don't have to have it, but can I?
Yeah, just go ahead. I can rewrite it. Yep.
Okay. So
Um,
does anybody use anything? Does anybody know what profit first is? You guys can't say that. You're cheating. Look at you almost like, yeah, I know. Any guesses? Profit first is like hacking. I think it is the fastest way to help you get what you want. So you're talking about how much money do I need to spend on my personal house? How much money do I need to take out for taxes? How much money do I need to have set aside for a rainy day? How much money do I, those amounts are very personal. That's why the personal budget part matters. Just raise them all. No.
The blank.
It's just right there. Once you have that, it's the how. It is the how you get it done that is important. So for what I've done, and do you guys use profit first?
Yes, but we don't have all 5.
Okay, so this is, if this gets confusing, do you guys promise to stop me? Because I'm going to go down a rabbit hole. I'm going to love everything that I'm doing. I need you guys to pull me out. Can you do it?
Yes.
Okay. So you got all these different accounts, okay? And so how do we make sure these accounts are in your business name and not your personal name?
Better set up business accounts with your bank.
How do you set up business accounts with your bank?
Most of them need the articles of incorporation and an EIN number, and then you can go get them set up in your LLC name.
So that's a great point. So you have your LLC, right? And then you register to get an employee identification number. And what that means, or employee, employment, whatever, it's replacing your social security number with the business tax ID number. So that way, if you gave the Market Center your LLC EIN, we would then 1099 the entity and not you personally. And so once you go through and create that, then you'll give that to us. And so it's a different 1099 process.
So by creating that, you're giving the government another social security number essentially, but it's for your business and it separates the two of them. That makes sense? So we got the 5 accounts here. And so each one of these is their own separate account. This is going to feel obnoxious and ridiculous, and it is, but the peace of mind it will give you is absolutely worth it. Andrew, when you and I first reconnected, how many bank accounts did I have?
Pushing 60.
Like, so when I'm saying that, yeah, I mean, 100%.
Was the banker.
He was started walking in like, can you just, he's like, really? We just changed that. I'm like, I know, but it wasn't my personal name, not my EIN. So can we just remake all those accounts? And so when you're starting it, you create the LLC correctly. You only have to do it once. But I promise you, it is worth it because to Rachel's point, and this is a long-winded way to get here. How do you know if you're winning or losing?
Paying your bills and the lights stay on.
That's how you know that you're right now, you're good. Winning and losing is something that you can project out. If you can't project out that you're winning, you're probably losing. Or you're winning right now, but you're not preparing for something terrible. So you're winning right now, it feels good, but you're not helping yourself or protecting yourself. And then something bad happens, now you're losing.
Nope. Losing so slow, you think you're winning.
Yeah, God. Ooh, I like that. So each of these is their own percentage. Let's do a commission amount of like 60,000 because I want to break this down so you guys can just see it. 60,000, commission amount of 6,000.
Just a normal transaction.
Yeah, there we go.
6,000.
Okay,
Yeah.
so when the market center pays you the money, are they paying you or are they paying your business?
Business.
Business, that's right. So KW pays your business, which is business LLC, whatever. They're gonna put the money into your income account. Okay? Every deposit that you get for your business goes into the income account. All of them. So if you need to look and see how much money did I make, is that accurate? Is it not accurate? I think I called you on January. I was like, that's not right. And I had it all up. I was like, this is right. Okay.
What a pleasant surprise.
So it goes in here, and then from here every month, you can choose bi-weekly or monthly or weekly, whatever works for you. I would recommend doing something that's not weekly or all the time. If you can afford to do it once a month, do it once a month. It's just easier. It takes less time, so you don't have to like feel like you're just getting bogged down by running your business or running the finances or looking at the numbers, because it's not always fun, right? So, not a CPA. We all agree I'm not a CPA. When we start, I always start at 25% for taxes, always. That should be more than you need, ideally. Now, if you pop off and you sell a ton, you might have to go up more. But with deductions and everything, you talk to your accountant, 25 should be a really good place to get you started. Okay, and you can adjust it quarterly once you get a CPA. Just trust them at that point. But start setting something aside for it. Okay. Can somebody take 25% of 6,000?
1,500.
Thanks. Did you really go? Okay, I was like, what the heck, Logan? That's wild. Yeah. Okay. So 1,500. So how much money do we need to make as a group? Just pick a salary that you got to pay yourself for. 60,000, 70,000, 100,000.
100,000 for easy math.
100,000 for easy math. I like you. Okay, so we need this to be 100,000 for the owner pay. Is everybody tracking me so far? Okay, so what percentage do you guys want to plug in at first of the $6,000 to the owner pay? So 100%, we're subtracting 25%, so it's 75% left. You guys choose. 40. 40, somebody else choose. Is it 30? Let's do 30. Just for grins, we're going to pay yourself a profit percentage of 5% in the beginning because I feel like that's probably accurate. Not really. As a solo agent, you guys have the ability to make so much money. Holy cow, you're never more profitable than you are as a single solo agent. Would you agree with that?
100%.
It is.
100%.
I get chills.
If you set it up correctly, you will realize, and if you understand leverage.
Mm-hmm. So we got what? Plus the 60%, so we have 40% left. Okay, so we're going to do the 40, the remaining 40% right here. Is everybody with me so far? Good.
Why did you choose to pay yourself before figuring out and paying your expenses?
Really good question. So that is actually why it's called profit first. So to an accountant, this doesn't matter. And actually accountants hate this system, and so do bankers, because they're like, this is just extra work. So a normal business or income statement or anything is income minus expenses equals profit, right?
Mm-hmm.
What this is income minus profit equals expenses. Because what happens if you make $6,000, you don't have a number to play with, so you're just spending money like crazy, and whatever's left is what you get to keep, right? There's no game there. It's whatever's left. If you flip it around and you take the 6,000 minus what you need to pay yourself first, and then it gives you another number, which is the expense number. And let's say the expense number is $1,000. You know, for the next month, I need to run my business on $1,000. So if somebody comes in and says, hey, do you want to do this thing? You can check your expense account. And if it says, hey, you got that ticket is $1,500 and you have $1,000 in the expense account, what does that mean? Can you do the thing? So you can, you're just only going to be able to pay $1,000 of it.
So then the expense here is only for the business expenses. We're not taking a part of any personal expenses because we have, at this point, we have separated both. So then you're doing your profit to cover your expenses, which is your ends meet day to day or month to month. And then you're just running your business on whatever's left after that.
Everybody track that? With us?
I got it.
Yep, with us? Evan? I'm just kidding, I know you're with us.
That makes more
And
sense.
Christy, it was 5% to pay yourself for the example.
And so really fast, because you said that so eloquently and everyone's tracking it. This is a profit for your business.
30 to pay yourself, I think.
I was like,
Oh, 30 to pay yourself, Christy, sorry.
so the 30% here, the owner pay, that's your personal salary. Okay, so this just makes sure that you know that your business is profitable. Because whether you want to invest, whatever you want to do, the banks, what they really care about is, can you run a business? If the answer is yes, it means you're profitable. And if you're profitable, they don't need to see a lot. They just need to see something. Okay. So what's 40% of 6,000?
2,400.
Any players interviewing. 5%. 300 and 30%. Bet it's 18. I wasn't trying to. Okay. So this is what I like. I love solving these problems because we know I can pay myself $1,800 out of every closing if I take 30%. And if my average commission is $6,000. What is $6,000 commission? What's that price point? Can you do that here? Yeah.
200,000. It's about.
It's about 200,000. What's the market average price point? Anybody know?
270.
Oh, yeah.
So 76, is that what, 75?
Say about 240 to 260 at this point. Yeah.
Oh, I think it's this one's.
Yeah. And that's probably the data from just 1 month.
Right.
Mhm.
So this is realistic is what I'm trying to get at. We're actually under, we're way under it at 200,000. Okay, so we want to make 100,000, right? So 100,000 divided by 1,800 equals what?
I don't know, I made that up.
I was about to.
I believe you.
I did too, right?
I think I'm close.
56.
That's pretty close, okay. So you need to make 56 sales. You need to help 56 families. So I'm gonna take that and divide it by 12.
4.5.
There's no such thing as 0.4 of a house. So 20, what was it, 5? So 5 homes per month. How's that feel? Attainable? Yeah. Let's make it better. Let's lower that number. So somebody take 1,500 and multiply it by 56. I think you guys' stomach hurts.
84,000.
84,000 goes to the government unless you invest in real estate. Hashtag C. Trey Watson, keep that money. 2,400 times 56.
Oops, sorry. 2,400 times what?
So 56.
134, 400.
134, 400. Okay, 300 times 56.
16,800.
Okay, and then 1,800, well, that should be 100,000.
$100,800.
Okay, that all makes sense? So if you hit your goal of 56 deals, you're paying $84,000 in taxes, which is probably gonna be higher than that if you sell 56 homes. You're running your business on $134,000 a year, which is wild. You're paying yourself $100,000 and you're making $16,000 for just profit. That's just money on top. So really fast, a caveat here on the profit is what we do. You can do this however you want. Sarah and I and the team and the agents on the team, we take this out quarterly. We just pull whatever's out. And for me personally, this is spent on something fun because I work really hard and I like spending a ton of money on stuff. So whatever money is in this account is whatever I can just go buy furniture. I can go buy toys, whatever it is. Car, maybe. That's not quite enough. So can you run your business on $134,000 a year? A lot of coffee. It's a lot of coffee. What's up, Hannah?
Okay.
Yep.
This might be a silly question, but if you get to the end of the year and you don't use that whole 134, do you keep it there or do you?
What do you want to do with it? You're the owner of the business. No, you can.
Yeah,
Or the
I know.
what do you do?
Yeah.
Throw it in your profit.
Or reinvest it back into your business. Maybe you were thinking next year you want to put on a really cool client event. Great, there's the money you can use for your client event.
Yes, keep in mind, this is why profit first matters. Remember, income minus expenses equals profit. That is how it normally goes. We flipped it around. This is just a psychology thing. The formula doesn't change, however you rearrange the words. If you can't do it in $134,400, you don't do that thing. That's the hard line of profit first. But there are affiliates, there are other agents, there are other people that will give you money because they want your business. So they can make up the difference, so they can save you money in those ways.
So Market Center hat on, I want to clarify a couple of things. This income getting deposited into your account, that would be after your split and you paid into your account. So just know if you're not capped at that point, this number is this can't be the commission check from the title company if you're not capped, right? And once you're capped, then it's all great. But just keep that in mind of whenever you're looking at those numbers.
So do you have a different account for each of those then? You have a checking account for each one of those?
I'll go one further. I need to know how many months I can pay Andrew's salary. So I actually have an account that just has his salary in it.
Okay.
And whenever you really dive into this, the reason I have so many accounts is because I want a percentage of each check that I have to go build the accounts that I need to build so that I can log into my bank account and see I have 6 months there, 5 months here, 9 months there. I'm winning. I don't care a check anymore. Peace of mind, done, moving on. Setting this up is a pain, guys. For sure. It is.
Yeah, but once you get it, it's
Being
good.
able to log in and that peace of mind, it's perfect.
You only have to do it once.
Yeah, I think if you took 2 hours out of your day to go do this, then you don't think about it.
And it truly does. You take it to the banker and you say, hey, this is what I want, and let them do it. So, I mean, the work happens before you ever get there.
And then when you do that, do you title it or do you just put it under your
This
name
is
or?
literally it. It is.
That's-
So for
it's
me,
title
because we have like the team,
Okay.
property management, our investment company, we have all these different ones.
Uh-huh.
Like it would say property gurus tax,
Okay,
property gurus expense account, property gurus
Okay.
profit account.
Got it.
property. And then so once a month, basically, all of KW deposits all of my money into the income account.
Mhm.
And then I take all of that income once a month, I apply my percentages. Then I make 5 transfers. Then I'm done. There's no more. And so we can adjust these things. So this is what I want to show you guys because 5 is super attainable and everyone in this room can do it. Very few people actually sell 5 homes a month. So does not mean limiting you because you can. When you start making this much money, all of a sudden you start to value time and you decide that maybe I don't want to work super hard all the time. So if that is the case, let's change it. It's percentages and it's numbers. Here's a rule of thumb. If you can make it a math problem, make it a math problem. Always. You can make it a math problem, make it a math problem. So I want to sell less than 5 homes a month because it's a lot of work. Okay. Where can we pull money from? Where can we adjust the percentages to change the number of homes sold?
Probably from expenses.
You could. I wouldn't touch this one until you know.
You call it trade.
Right? It's true. So let's see, how much do you think you guys could run your business on? 60 grand? That's a lot of money, guys. Because this is just the things that it takes to operate your business. Everything else is taken care of. So this isn't paying you, this is everything else is already taken care of. So this would be gas, this would be leads, this would be a transaction service like this, whatever you guys want to spend the money on.
Finance, marketing,
Cards,
coffee.
car maintenance, yeah, coffee. It's the easiest way to do it. Talk to me after this. You need to know how to do that.
I think 30,000 probably be pretty decent
Very
guess.
doable. It's very doable. Does anybody want to run it on anything higher than 30,000 because they don't think 30,000 is doable? Good with it? Bottom line, we good?
Chrissy had a question, is 40%, what percentage did you say to use to pay yourself, and is that part of the 40% expense category?
So the expense category is just what you use to run your business. The owner pay is what you pay yourself. So when I sit down and Cpa Do deposits all the money to the income account, and then I make the 5 transfers, there's another transfer that takes place. It is automatic, it happens every month. It is from my business LLC to my personal LLC, and it is the amount every single month that I've decided that I am gonna get paid from my business,
Your salary.
my salary. And you're in control of that. You can change that whenever you need to.
So a good question for you is knowing when you win or lose. So you look at these accounts and you say, okay, I'm winning.
Mhm.
How much money do you keep as this as a safeguard? Because not every month is gonna be 5 homes, right?
100%.
Wish we could have 5 closings consistently every month. Sometimes it's 7, sometimes it's 1, sometimes things get pushed and they fall out. So if you're looking at a yearly basis, this looks like a lot, but what happens in 3 months if you didn't have a closing and you need to adjust? How would you know you're winning? What is your threshold for reserve?
I want 2 to 4 months.
Mhm.
Some people do, I think most on average, the average business has 27 days of reserves. 27 days. The average household can afford an expense of like $500 or more,
And I think it depends on the size of your operation.
100%.
And so an individual agent, you can go that 27 days.
Mhm.
Market center, for us, it's 3 to 6 months minimum. And with the changing economy right now, we've been pushed to 6 to 12 months. Just looking at our operation and our monthly overhead. So it depends on the size of your business, for sure.
And so, but do you have a separate account for the nest egg for when things do get tough? That's what that's for. You don't just keep that in the expense account?
You can do either. I prefer having a separate account because I can just scroll through the list and see it, know it's there. And I'm good.
You heard of 60 accounts.
Yeah.
Yeah.
There's an account for that.
Yeah, for sure. And so like my list can actually do more. But it all starts here. This is where it started. And customizing it on top of that is however you want to do it. So if you're looking at it, it makes it easy for you all being in there. That's okay. Some people can run it from the expense account and it's linked up to QuickBooks. And so they can just run a profit and loss every month. And that's enough for them. I would have to run a profit and loss every other day. And it's just not worth it for me.
So just like when you're doing your personal budget, having a separate account, that is your nest egg account. So for us, we label it as like, if everything hit the fan, how do we live?
So let's say the market shifts. You know how easy it is to go in here and adjust your expenses. Hey, holidays are coming up. I need to make more money. Cool. Pay yourself more. Now, what I love about this is you have to pull it from somewhere, right? You don't just get to make it up. That's what I did for like years. That's not how.
Well, I think I'll take a little bit more this month.
For sure. So we're going to drop this down to 20%. So somebody, what is 20% of 100? Well, geez, 20%. Yeah. You started here. We'll do it all the way through. This will show our work. What is 6,000? What's 20% of 6,000? 1,200. 1,200. What is 1,200 times 1,200 times the 56? Yep. I'm out.
Numbers. 67.2.
So now you're running your business on $67,200. We gained 20, so let's just do the same thing here in 50. What is 50% Canadian dollars? So that one is 3,000. So what is 3,000 times?
168,000.
$168,000. Nice. Now nothing changed. We just moved the percentages around. So now we just need to drop the deal count. If we want our time back, I want to show you that this is a tool for money and time both. Okay. So take 100,000 divided by 3,000.
33.33.
Cut it in half. You made that up. It's gonna be close, but you should be right. I hate that you were right. Okay, what is that divided by 12?
Well, that's going to be 34 if you don't do 0.3. So then 3.
3 hours per month. So this is gonna be a pain, and this is the last exercise we'll do, and I'll stop with all of this stuff. I'm gonna literally erase all of these. Okay? This is how percentages work. We just changed the number that we're making. Okay, now we're selling 33. Okay, so what is 1,500 times 33?
49.5.
49,500. 1,200.
39.6.
39,600.
99. 9,900. Times 33. 99,000.
What? Pretty close. Next, the 3 month. And by doing it this way, can you run your business on $40,000 a year? To make that more palatable, I guess, let's do 40,000 divided by 12. That's a salary from what somebody said a second ago. Can you run your business on how much you would pay you? That's $3,300 a month. That's a lot. Make sense? What questions do you guys have? I can see a lot of processing, which is great. I love it.
You're underpaying, so basically you're just transferring that, I mean, it would kind of almost be zero all the time. You have that account, but you're paying yourself, so it ends up being zero.
So if the owners pay, I try and leave around 3 to 6 months in there.
Oh, okay.
Because here's the beautiful thing about how this happens, and I guess this is the last. Do you guys want to take a photo of this, or does this all make sense? Okay, so as you get paid, these balances add up. So if you have 1 month where you get 10, you have 10 times 3,000. So it's not going to be this static amount. It's going to go up and down. Because you're closing deals consistently, you'll find really fast, all of a sudden you can look at this and go, oh, I actually already got 12,000 in the account, so I can pay myself for the next 4 months. Because we know you need 3,000 a month. It was very easy to look at the total, divide it by the number you need. Oh, I'm good for that many months. Does that make sense? Okay. Any other questions? How's your chance? Okay, sweet. Again, you want to add anything to that?
So as we get ready for a shift, and we were talking about which I guess we should talk about what the importance of a shift is. How many of you have heard that the market is shifting and it can be really scary? Yeah. I've never been an adult through a shift. Last big shift, I was in high school, so I had no idea what was going on. So to say that I feel 100% secure in what's going on, I'd be lying to you because I just don't know how to navigate it. And so with everybody talking about a shift, there's that fear of like, are we going to make it? Is everything going to be okay? What happens if everything changes overnight? What do we do? And yet, I think you grow into the conversations around you. So the biggest exciting thing about a shift for us is that it's time to take market share. It's time for the agents that are actually doing those activities consistently that are going to keep going. So if you're doing the activities consistently and you see that you're good, then you have the peace of mind that you can go out and sell those houses. Because there's plenty of buyers out there. There's more homes coming on the market. Interest rates are still at what an average interest rate would be. It's just not the ridiculous amount that we saw a couple of years ago. And when you're talking to your buyers of renting versus owning, would you rather rent at inflation prices? Because, I mean, tell me, do you go at inflation prices when you set your rent? Oh yeah. I mean, that's the first thing we do is how much can we get? There are people who will pay it. So when you're talking to your clients like that, are they going to rent inflation or are they going to buy it what the interest rate is and be locked in for 30 years? And so as you're thinking about this, it's right, there's the unknown that's coming into it. And yet, what can you do every day? What conversations can you have every day to prepare yourself so you do feel confident? Because if you don't have this in line, I will tell you that has been one of the most uneasy ways to live your day, of wondering how you're going to make ends meet, how you're going to pay your bills. And then everything else just gets scattered because you're worried about having the money in your account. But if you could look at it in a glimpse and say, I'm good, then now you can go and focus on that. And that's your true attention with it.
How many people don't want to be associated as a salesman in the room? Right, like, Yeah.
Commission breath.
Yeah, commission breath is a very real thing. When you don't know if you need money and someone's like, I kind of want out of the contract. Been a part of a lot of deals. If you need the money, it shows. It will show and you will see it and they will see it and they will feel it. If they will feel gross, then you will feel gross. All you have to do is know this. Because here's the thing, what happens if you find out you're losing? Right? I'm losing money very quickly. I need to figure out why. You're tracking that, so you can figure that out as well. Right? But the cool thing about realizing how much you're losing or that you're losing is it tells you exactly what you need to do to fix it and how long you have to fix it. So to Rachel's point with like the ship, okay, I know by month 6, if I haven't sold anything, I should probably start looking for a job. Unless I haven't been working, in which case I just should probably start working. Either could happen, I guess.
Right. Well, you made a lot of money in 1 month, so then you take your foot off the gas. And then then your whole business is like this.
Mhm. But your household won't feel it if you pay yourself the same amount every month. You take the same percentage out, and then every month it's this is how much money we have, this is how much money we have, this is how much money we have. And that amount is what you actually need to run your household. You need to run your personal budget with. So it's all okay. Feedback on this? Like it? Give a takeaway from it?
What percentage would you recommend or you would personally do? Because like, I'm sure a lot of us, we're not exactly at the point where we're debt free. So how much would you recommend maybe saving back and try to kind of chip away at some debt?
What are your goals?
Well, I mean, I'd like to be completely debt free by the end of next year. And I mean, I know the numbers and stuff like that.
Yeah, so I mean, I would take all that information and I would know that I, as the owner, need to make as much money as possible. And I would keep this where it needs to be. I would run my business as lean as I could. I would drop this down to 1 because I just need to be profitable. I want to make sure I'm paying myself. And I would take as much money as I can and I would just pay that thing off. That was my goal. It's an easy adjustment.
And that would be like a Dave Ramsey versus Grant Cardone, and that would be a Dave Ramsey with your debt snowball. Listing everything out of what's your smallest expense to your largest, and then start knocking them out for your goals. And then if you're increasing this, then what can you pay off first? And maybe in 1 month, if you're paying yourself a little bit more because you maybe had more than 5, maybe you're paying off one of the things off the whole month.
Good question.
The biggest advice I ever got when I had the opportunity to pay off my car is I still paid a car payment. I didn't absorb that money and think, wow, I have more money now. I put it into a separate account, and every month my car payment goes into that account, and I don't think about it. And so then now I have the reserves built up. So if I need a car, I can go buy a car. Doesn't mean it's a nice big bright car, but it's still something that gets me from A to B.
That's the Dave Ramsey thing. I see when you're paying off your credit cards. You take whatever you're paying on the first one you paid off, you continue paying it towards the second. And then 1 and 2 goes to 3, 1, 2, and 3 goes to 4. That's how that works.
The more money you get, sometimes you increase your lifestyle, and then just and in the age of life and who you're around. So if you don't have that money or you're putting it away or it's an automatic transfer, it kind of eliminates that. Wow, look how much money I have in my account. Even if it's going into like a money market account where it's earning a little bit more interest, and it takes a little bit harder of a step to pull that money out. Like with a money market, they need like 2 to 3 days notice. It's not like a swipe of your card or a transfer on your app.
And then another thing that we kind of wanted to touch on, because we really want to know the things that you guys are interested in learning, like from the top down, because we're going to kind of touch 7 hours. So we're going to touch on a few more things. The other side to that is that you can deploy your money in an asset, and then your asset can give you money every month. And then you take the money that you make from the asset and then you pay down the debts. Or you buy more assets until you can basically pay off the debt. But I really want everyone to understand how finances play into investing, because everybody at some point wants to invest, and you cannot invest without finances. You can't do it. Like no money down, like those things exist, but that's somebody else's money. So if you lock it in, you can do it either way, but just know there's 1,000 ways to get stuff done. But every one of them starts with this, one way or the other. Okay.
Does anyone know the difference between income versus revenue?
Revenue is after the expenses and, right, or do I have that backwards? Revenue is like what you earned after the expenses, that's your gross, right? And then your net is like after taxes and what you've paid yourself.
Anyone else?
The income's the money you're paid. There's your $6,000 commission check. Your revenue is after you run it through whatever bills you have to pay.
Income minus expenses is revenue.
Income minus expenses is profit,
Right.
right? We're giving this in terms. That's really important to know. Shed the light,
Shed the light.
whatever it is. Are you guys good if I erase this?
So your revenue is what's coming in from your sales in. So that is your gross amount. And then your income is coming in after that. So your revenue, or in real estate terms, it's like your GCI, your gross commission income. That's the check from the title company. And then the income is what you've paid yourself after it's been taken out. Kind of like the terms gross and net, gross profit versus net profit. Because the gross amount is kind of gross because you still take the nasty stuff out of it. The net, when you pick it up, it's out of the net. Cogs.
You can make it a math problem. Make it a math problem. Does anybody know what a cog is? Cost of goods sold.
So how is that with the services side? Because I mean, that was something that always confused me. Maybe you know the answer to, but whenever you're looking at like the cost of goods sold, whenever it's a service versus a, do you know what I'm talking about? Versus like a product?
Yeah, is it, so for me, and there's guys, finances, as long as it makes sense to you and you're doing it, you can customize it in a way that makes sense to you, as long as the terms are correct. Okay, as long as you're talking, if someone says income and you're talking about income, there's a lot of people that are like, yeah, I run a really good business. And it's like, well, yeah, well, I made 350,000. Well, but that's your revenue. It's not your profit. Well, it's the same thing. No, dude, it's very different. Those are very real conversations that happen all the time. So for me, a cost of goods sold was something that I could tie into a transaction that happened every time. If it was outside of that purview, I just let it, I just leave it alone. I ran it as an expense. So like onward agent services, that's something that happens every transaction. So I would turn around and use that as a cost of goods sold every time. If I do a closing gift, that is a cost of goods sold.
In the MREA, they call it cost of sale. So I guess you could change it, goods is the product, sale is the.
Yeah,
So
that
they,
actually makes more sense here.
so the cost of sale, it would be, if you close that transaction, what costs do you have associated to that transaction? So if you paid out a referral fee, your cap, a transaction coordinator, all of those, that happens because of the sale. Now, your monthly dues or your gas or all that, those are expenses. And so you break them out that way. And in the MREA, they actually have the budget different accounts, but there's only 8 of them. Now you can expand as much as you want it, or you can compact them into those 8 budget amounts. And if you guys want, I have a very basic Excel sheet that I put in. What is our commission coming in? What is your cost of sales you minus out? What is your expenses? What's your taxes? Any other income and your profit. Now it doesn't break it out like the profit first, but it allows you to have some sort of P&L for your tracking system.
So revenues at the top, you minus cost of sale. And that's how much money you are personally making. Because a cost of sale, you should be able to write off every time. Right? And then so minus expenses, and then it leaves you with the profit. And your salary is an expense, right? It's going out. And you're still taxed. So then you have profit.
Because then the profit amount would be like that 1% that he said, or the 3%, 5%, whatever you're wanting to put it.
Whatever the percentage is of the commission. Does that all make sense? What is the job of a bookkeeper? This took me so long.
I would say it's just to accurately track those things.
How, is there a comment there?
Noah said he needed my spreadsheet.
Oh.
You got it, Noah.
All yours, dude. So we're tracking expenses.
Well as your income, cost of sales, all of it.
Okay.
Making sure that it balances at the end of a particular period, right?
Any other guesses?
Could you also have them perform action on those accounts? So for example, if you needed more income for the holidays, you could say, excuse me, can you actually help me switch around my expenses to give me a little bit more money?
He like listened to our conversation when we were playing. this.
Yeah, almost. You're
Yeah.
doing like a proxy on your.
So a bookkeeper, all they do is categorize your expenses. That's it. Anything more? That's QuickBooks. If you know how much they got paid for clicking buttons in QuickBooks, you throw up. They just categorize things. The chief financial officer, I'm just gonna do this. The CFO interprets, I'm not gonna spell it out. They interpret things, they guide you, they show you, they make the changes. They're the ones that run your finances. Okay, so but those are two different people. A bookkeeper will just categorize it. The CFO will get the sheet that shows everything that's been categorized and say, oh, we're gonna be out of money in 2 months. We need to change something. Hey, COO, CEO, we're in trouble because they're representing the finances. What does a CPA do for you? Tax stuff.
Because I have to pay less
Tax
taxes.
stuff. Okay. So what you're saying?
Always figure out how to pay less taxes.
Yeah.
At least a good CPA would be.
Okay.
Hope you plan for the next year.
Okay. On the reg now, this one, because she isn't there. Anybody else? Rachel, what is the job of a CPA?
Well, for us, it's our checks and balances. And they understand the tax code laws. Like in my role, so if I broke it down to the market center, and this is an example, by no means am I saying this person is this. So Landon would be a bookkeeper, right? He is categorizing where the commission checks get paid to what account. In my role, I am forecasting and saying, hey, we have this much in the reserves. This is where our expenses at. We need to course correct throughout the years or the months in order to get us to the profit that we're wanting to get. CPA, they understand the tax codes. They tell us how to file it. They do all of that fun stuff. And I'm just saying, tell me if I need to adjust accordingly based on the tax code law. Because I did not go to school for this.
But really fast, does a CPA tell you what you need to do to go where you want to go? No. They don't guide you. They don't show you the fastest way to get somewhere unless you can go in and say, this is what we want done. This is where we want to go. And this is how fast we want to do it. Then they can utilize the tax code effectively. But if you send them your books and you say, do tax stuff, they're gonna go, tax stuff done.
Perfect example. First year in real estate investing, getting this done. Trey and I sat down with our CPA and I said, okay, so like, what are the tax hacks we need to know? Like, what deductions do we need to do? And he goes, and his brain was just like frying because he was like, no, like very black and white. This is how we file. This is how we keep you out of jail. Not, hey, tell us the best way to use the tax laws in order to get the best return for us or pay a less amount of taxes. So to Blake's point, he said, you give me your books, I will do exactly what the books say. They're not going to guide you to look around those corners to where you can pay less in taxes. You have to learn that.
Gross, right? Oh,
Yeah, he looked at me and was like,
what are you talking
I
about?
was like, and I was like, maybe I shouldn't have said the word hack. Maybe
Yeah.
that's like the word I shouldn't have said. Very touchy. Yeah, exactly. He's like, there's no hacks. Okay, cool.
So as a solo agent, which one of these are you guys?
3. Oh.
Every single one of them. Every stinking single one of them. So how much time are you guys spending categorizing your expenses? Uh-oh. How much time are you guys spending interpreting the financial statements that you're getting to see if you are moving in the right direction or if you have to get a job next month? How much time do you have in your calendar booked out for those things? Your face, Hannah's perfect.
We could just have that snapshot.
Yeah, just like,
How was our class
taxes.
today? And then he has that.
And then your CPA, you have to know where you want to go. How much time are you trying to figure out as to where you want to be in 5 years? I love this building more than any other building that I've ever been a part of, because we spend a lot of time talking about where do you want to be in 5 years? You could be anywhere you want to be in 5 years. Here's all these cool things you can be, and it's all 100% true. And you have to work your ass off on these things to get there. And like Rachel and I really want to bring these things to you guys so you can see, it's like, hey, if you're not spending at least an hour or two, like a week, 5 a month maybe, on just your finances, like, it might take you 10 years, but if you just spend a couple hours here, you get it done free. You have to know where you want to go. So you're not the CPA, thank goodness. You have to pay a CPA, but you have to tell them where you want to go. So you have to know where you want to go. So much time are you thinking about where you want to go? That's a whole nother class. Okay. Questions on that? Thoughts, concerns?
Hashtag Trey Watson's well.
Hashtag Trey Watson's. That's very good.
And that kind of goes along in the deductions, right? You have to understand what deductions you can use in order to tell them, hey, I have these deductions.
So I was curious what you could have said in that exact situation to, have them do what you were basically asking them to do. But it sounds like you need to say like, hey, you already need to know the stuff.
Yeah.
Which seems self-defeating to me because again, I didn't go to school to be a CPA. I want you to tell me things.
Exactly.
So,
Right? Like,
Yeah.
did they go to school to be real estate agents? No. Are they paying us to help them get what they want, but do they have to tell us what they want? Yes. That sucks.
No one's gonna manage your money better than you, because it's your money. It's your profit. So if you didn't get to have $1,000 deduction, it's gonna hurt you, not them. And so how do you find out those deductions? I think it's through just a lot of learning and all. I asked Trey, I said, so how do we figure out these deductions so we can have our tax? And
YouTube?
yeah, YouTube, bigger pockets. Talking to other real estate agents to say, what deductions do you take on a normal basis? Are you tracking your mileage?
Mhm.
Or are you just taking the max amount you can give? What apps can you use for that? Are you looking at your finances? Are you managing your expenses versus just spending whatever and then going through and just slashing them? Not really knowing what the return on investment is for each of those expenses.
So, some common deductions that I feel comfortable to speak on would be mileage or vehicle maintenance. It's one or the other. Don't think you get both. Right now, you get 63 cents a mile back for all your business mileage that you're driving. So how do you track that? I would not recommend doing it in like pen and paper.
Mike Brown does.
No.
Yes.
Good Lord.
And maybe it's now an Excel sheet, but I caught him and he goes, sorry, I'm updating my mileage. And I was like, wow.
Chad does that.
No, he doesn't. Is he really?
On paper, that's what he told me.
Makes me sick. Spend $50 for the year, and if you can't afford it yet, call me. As long as you'll do it, don't do it with my hand. But so you track business, personal. There's an app. It is always on when you're in your car. When you go above 5 miles an hour or something, I think it turns on so it knows. It'll generate a report for you at the end of the year, and you send it. And every mile that's categorized as business. Imagine you trying to run 10 miles an hour. That's something that's like, oh, that's good. You get 62 cents, 63 cents a mile back. And that changed. I think it was 58. I think they just increased it by 5%.
If you just Google what is the mileage rate, it'll tell you the most updated mileage rate.
And so I'm going to nerd out on this little bit of wealth building, but I want to just kind of show you guys what understanding the tax code and like real estate investing and you being classified as a real estate professional, like is a deep rabbit hole that you can go down. You're in an excellent building with tons of people that will just walk you through this. If you, I don't know what deduction is, cool, call us. And has been really good about, hey, like, can we get coffee and just talk about X, Y, and Z? Yes. Because I wish I could have called somebody to walk me through something so simple. It would take an hour that took me 17 hours on YouTube. So as a real estate professional, you can take, if you buy a rental property, okay, all the cash flow that you make goes into your income. So if you made $100,000 and $12,000 of that, on top of that was the cash flow from your property, you make $112,000 per year. Does that make sense? So because you're a real estate professional, you're not changing industries. Okay, so you have rentals or real estate sales, and then rental management, and then rental maintenance, and it's all within the same umbrella. Okay, so the income that is generated from your properties goes into your personal income, which that would suck if you're a, let's say, a grocery store manager and you had a ton of properties, because that would be subject to self-employment tax. Because it's a separate entity. It's not the thing that you do. This is why it's so important for you to go to #TradeLossAsWellBuilding class, is because what you can do is you also get to take every expense that the house has against your actual income. Okay. With houses, you depreciate them. Okay, so just some terminology here. Appreciation is when something gains value. Depreciation is not when something loses value. Depreciation in real estate is what you get to do to something that gains value. It is a hack. This is a real estate hack they're talking about. So that $94,000 or $84,000 that you had in basically taxes, if you bought a rental property and you've taken the time to educate yourself on the tax code, and you've asked people in this office what to do, you can buy that property and through something called a cost segregation, Google it. You can literally take all those expenses against that house that you get to pay over 30 years, and you get to roll it forward, and you get to take it as an expense against your year one income rate. That can be tens of thousands of dollars per property that you get to take. So you have to buy 2 or 3 properties, and all of a sudden you're only paying $20,000. You just saved yourself $60,000 because you took some time to understand taxes. Now you have to be a good steward of that money because you could totally get yourself in trouble. Call it a CPA. But like, please #TradeLossAsWellBuilding. But there's so many things that you can do with real estate as an investor, as a business owner. It's just super, super cool.
And maybe you're wondering, where am I going to get the money to buy my first investment property? Well, did you know you can get an FHA loan for first time that if it's 4 units or less, you can get in there with 3.5%. So if I, looking back, had known that, but before I bought my first house, if I would have bought that FHA, I could have had 4 doors and I'd been living in one, the other 3 were paying for everything, or duplex, right? That would be the easiest thing. Looking back at myself, I'm like, duh, I wish someone would have told me that sooner. But you could live in the duplex for now, the other side pay for everything. So that's something you're looking at doing. There's your first step, and you're only putting 3.5% down, and then you already are an investor as well.
Or I don't know how to borrow the money. You can literally take the government's money and buy a rental property with it. It continues to appreciate. So as it gains value and you continue to sell real estate, you can buy another one. And you can appreciate that one against that year's income, and then you can keep doing that until you die, and you can just die a millionaire, a billionaire at that point.
Sounds awful.
It's just so terrible. Tax deductions, otherwise, meals and expenses. So if you take somebody out, right on the receipt, just a heads up, the government just hired like 87,000 auditors, which, and they literally said the people they're coming for is if you make below $250,000 a year. So if you take somebody out to a business lunch or a business something, write on it. Get the receipt. Yes, please. Get a pen and pen. Get a pen. I took so-and-so here for this on this day. Awesome. And then you use QuickBooks. QuickBooks is $25 a month. You link it to your bank account. You use the card that it's linked to wherever you go. It populates on your computer. And you categorize it. That's Bookkeeper you. And that is all they also do. Please don't get a bookkeeper. Super. Try and do it first, I guess. Let me say that.
And make a note in your calendar. If you're going to already have that appointment on your calendar, put as much detail in it so you can remember. I use Genius Scan as an app. So if I had the receipt, I don't want to carry paper receipts with me because ew. So I scan it with my phone, email it to myself, and I file it in a folder on my email that says 2022 receipts. So then when it comes tax time, I have everything in my 2022 receipt folder that I can go back and reference. Genius Scan.
And if you use QuickBooks, Andrew, how hard is it?
It's super easy. It's got its own built-in receipt thing on the app and it will actually attach it to the appropriate expense as well. So it doesn't get any easier than that.
Super simple. If you're afraid of QuickBooks, give it a shot. Call somebody who will help you with it for sure. Yeah.
I also say that most major credit card companies will help you link things to QuickBooks. You just have to give them a call request and they'll get you to the right department.
I was like, I think a couple months ago, they just switched over where you can call. You just need your online login.
That happened to Chase a lot. So
Oh,
just
sure.
push them to somebody else.
Did you raise your hand or you stretch?
Very stretching.
Great.
I was gonna bring something up a minute ago, though, the mileage. Don't remember exactly how this went, maybe this is a CPA thing, but when you're paid back on that mileage, it isn't counted against you when you go to get a loan for a property as well, right? They can add that back
They
into
can add
your
it back
income.
into it. So most deductions from your income, I say most, there's 3 or 4 that they can add back into your income for the year if you're trying to buy a personal property. Because this is good to know. Thank you for saying this. If you make $100,000 or $50,000 and you on your 1099 or your W-2 or whoever files your taxes, whatever that is called, and it shows that you made $10,000, when that lender goes and you're like, yeah, no, I made $100,000, it's a really good year. And they pull your tax return, they're like, it shows you made $10,000. Like, I know, but I actually made $100,000. That just says that. The government says you made $10,000. So you will not be able to buy anything if you write everything off. Now, to that point, did that make sense? Okay.
It's more of what your plan is. What are you
100%.
trying to achieve?
And so tax advantages are super cool. This is something that people keep missing. If I make $100,000, that's because it's easy math, is what it says, $100,000. And then I have deductions, which this is really hard to do, but let's just say you do it, of $150,000. How much money does the government pay me? No, not a dang thing. So this is where a CPA really comes into play. There's no reason to write off too much. Because if you really want to take advantage of your taxes, you have to increase your income.
What's that funny video of, oh yeah, it's a write-off. And they just think it doesn't matter or it doesn't go against you. It's just a write-off.
Just get rid of it.
Yeah.
That was
I actually pay for it, it's just a write-off.
Schitt's Creek. It's David. Yeah, that's good. Sure. Does this make sense? So make sure you're not writing off too much stuff.
Another common deduction, how much can you deduct for closing expenses for a closing gift? What's the maximum amount?
50.
$25. It's the max.
Mhm.
Now, if you get something and put your nice little logo on it, and then you put some advertising, then that's not a closing gift deduction. That's actually a marketing expense, and you can deduct the whole thing. So something a few years ago that was really popular was those Cutco closing knives, where you put all of your information on there. That was then a marketing expense, not a closing gift expense. So you're able to wiggle around that. So again, that would be something you want to talk with your CPA or research or whatever. What information do I have to have on my closing gifts in order to write the whole thing off so I can take more than just $25? Because I know a lot of real estate agents that they spend well over $25 per closing gift.
Good.
So even if you give a gift card.
$25.
You can only deduct $25.
But I could write on there the homegirls on the gift card. From the homegirls.
Depending on the information, I'm sure you would need your name, phone number, brokerage. I'm sure there's certain specifics that you would need to research in there, but I know you can write it off for market. Why do you see people driving around their vehicles with their information on there?
Right on.
Write off. Marketing.
I was just gonna do it for marketing. I didn't realize that it could be.
Yeah.
Well, just know there's a difference between writing something off and then deferring taxes on something. Okay, writing it off means it never comes back.
Okay.
It's very good, but when you're talking to any CPA, you're talking to anybody about taxes, that's a write-off, as if I don't have to worry about it again, or I'm kicking a can, and at some point that can could come back and kick me in the face. Because a lot of people will defer taxes, and they're like, yeah, no, I'm great. And they spend all their money, and then a bill comes due, and they're like, whoa. What do you mean I owe all of the taxes on that? I thought I was a write-off. It's like, oh no, we were deferring. So like with the real estate investing thing we were talking about earlier, that's not a write-off. You're still on the hook for all those taxes. If you're allowed to defer it. In a way. No, we've touched on depreciation a little bit, but that's more of a investing piece.
If you have a specific question, put it in the chat and then we'll tell you if it's
Yeah.
us or somebody else.
For
that can
sure.
answer.
I'd love to answer it, but I would be here till 5.
I think it'd be great to put it on the books, hashtag Trey Watts.
For sure.
Glass.
Percent to save for lead gen and marketing. I don't like this question, and only because it's impossible to solve here. Like for your business should serve you. Okay. Like, man, I'm gonna mess this up. I'm gonna think about it because I think it's worth it.
Don't put a percentage for the sake of having a percentage. It's more of tracking your return on investment to see if it's actually worth it. Are you making money off of it? Because we could say you could put 12% for lead gen and you're using all of that, but are you actually using it to the best and getting a return off of it? Or are you just doing it to say, hey, I'm in budget? So like the MREA, they have budgets for or percentages for each of those categories based on your production. And for an individual agent versus the team, those percentages are going to be different. So I could have 5 different things that equal to $12,000 a month I'm paying in lead gen and I'm staying within budget, but I'm not doing any of those things really well. So if it's making you money, then that is something to look at. And are you staying within your expense percentage?
Well, I guess diving in deeper to my suggestion on that was, of course, we went through, broke down how many sales we were expecting, and then trying to break it down further into what lead generation activities that equals that amount minus, you know, the ones that fall through, things like that, and how much you should apply towards your lead gen and marketing, I guess.
Yeah, so this is like with the profit first thing, it's actually telling you how much you have to spend. Right? How much is in the account is how much you can spend. So it becomes kind of a game of, can I get it done with this amount of money instead of how much money do I need to be putting back in case something happens? Because that amount will always be lower than whatever you put back. And so the analogy I was thinking of is, so you basically have your car, let's say a car, and then your business. Okay. Money is like fuel. So your business needs money to go, correct? That is the fuel for your business. You have to put fuel into a car, right? So that the car can take you somewhere. If you run out of fuel in your car, what happens? It breaks down. You need more money. So you have to make sure that you have enough fuel so that it can continue to go. The purpose of a car is not to buy gas. Okay. It is needed to go, but you don't buy a car to buy gas. Okay. You create a business so that it can take you somewhere. You buy a car so that it can take you somewhere. So what's really tough about this question for me is, how much do I save for lead gen and marketing? It would be dependent on where you want to go. It's really important, because why are you in business? And there's percentages that you can dive deeper into, but it's always really, really tough. So it'd kind of be like, I'm in business to make money. No one says that. Truly. You don't buy a car to buy gas. You don't get in business to make money. That's needed and required.
Pitfall I see a lot of agents get into is they see this next shiny object that will get them 1 sale or 2 sale, and then they're buying all these different things. To the point where we've had to have a couple of agents turn off that credit card and then see what calls they're getting from these companies saying that their bills are past due to really see if it was a necessity or not. So like at the beginning of COVID, we had an A, B, or C expense category. So A was something that was very necessary to run your business on. And if you didn't have it, you couldn't operate in. B was something that you like to have, and it provided a little bit of ease or help. But it wasn't something that was you were necessarily tracking. And C was you had no idea what it was for. And it was completely unnecessary, and it was something you signed up for and you forgot. Like having subscription services is easy to get a part of even on your phone, or streaming services, all of that. How much categorizing those in the different expense categories to see, just like in your personal budget, what do I need to live off of? What is where I want to be that will have the lifestyle I want, and what is just completely lavish.
More questions on this one? On that at all? The next one's credit, and I really like this a lot. We got a credit card guy in the room, and everybody said they like using credit cards, myself included. So there's 3 ways that you can use it. So there's debt leveraging. I'm gonna keep referencing this because I don't want to transpose them. Debt bridging. I spelled out writing. It is what it is. And then debt anchoring. You guys have any ideas on what these are?
I have no idea what writing means.
Actually, I'm just gonna leave it alone. I realized really quickly that try thinking, if I spell it wrong again, I'm not gonna leave it for something to do. Any guesses? Let's call debt leveraging investing in real estate. That is, you are using debt to buy something. I think Gene Rivers said this, and I really liked it. The best deal you can get is paying 20%. Somebody else pays 80%, and you get all of the benefits of it. That's a good deal. That's a good investment. So this is using debt to give you a high return. Debt leveraging. Okay. Any questions on that? That one should be pretty straightforward, I think. The debt bridging is you use the debt to bridge gaps. So I don't have enough money to pay myself and run the business this month. So I'll tap the credit card to make ends meet, and then I'll pay it back off, and then I'll get going in it again. Okay, that's debt bridging. And then the very last one is debt anchoring, and that's where you use debt to run your business. But know that these are 3 very different things. Because when I first came into KW, you used to hear a lot of people talk about leveraging and debt. Like, debt's really good, leveraging is awesome, go for it. It's like, yeah, okay, but boy, you can get in a lot of trouble really fast.
For sure.
Because what leads to debt anchoring? Debt bridging. I just all tap into it this time to get this month. So I go to the next month. Well, I didn't sell anything, so I got to get month 2. Now, before you know it, you're using credit to run your business. And if you're using credit to run your business, do you have a profitable business? More than likely you don't. It's possible.
Carryover debt. Right? Debt that's paid off regularly isn't anchoring debt.
Correct. Correct. Any questions on that? Some kind of terms.
The debt leveraging portion, do you guys go over that pretty heavy in the wealth building and the investing? Like how to use?
I would say yes.
I think the last session they had talked more about creative financing as well, of in the different ways of leveraging.
'Cause I've heard that, just from different sources. Robert Cowett.
Kiyosaki.
Yeah.
Huge fan of
I
that.
hear a lot of talk about it, but I don't understand how you do it.
Yeah. So good debt and bad debt. Right. You hear a lot of people talk about this. It's becoming actually kind of a point of, it's like a talking point. Good debt is when you buy an asset. Good debt is debt leveraging. Guess what's an asset? This is a really good thing to go over.
Something you can create cash flow from.
Okay.
Something that appreciates that.
Something that appreciates the value of cash flow, for sure. What's a liability?
Money that you-
Okay. Can you make an example of a liability?
Car.
This is really cool.
Personal house.
So let's say, is your personal house an asset or a liability?
Yep. I don't know. I'm sorry.
Yeah, this is,
Both.
I was like, this one's such a, it's a weird one because it depends on which side of the fence you're on. Because you can justify both, but if an asset is something that brings money into your house every month, an asset it is not. Because it costs you money. Now, when you go to sell it, did it raise in value? Did it appreciate? Yeah, probably. There's really no way to track it until the end of it though.
So it could be a liability until it is sold, which then it was an asset afterwards. Or if you had like a duplex to a quadplex, then it could be an asset. But if it's only like a single family home, then it would be a liability. Which we're doing
A
business.
single family home could also be an asset. I tracked everything that you said and I agree with most of it. Just on the very end, I want to make sure duplexes are assets, but sourcing single family homes. So if I buy a single family house and I put somebody else in it.
But if it's your own
Correct,
personal.
yes, that's right. Just wanted to make sure. I was like, yeah, sure. And he was like, no, he just went down the floor.
But yeah, I mean, it could be, for instance, paying a house payment every month, it's liability, do a cash out refi, pull that money to go buy an investment, then it helps you get to that other goal, or you sell it and use that money to do that. Such a hard one. Going through a house remodel, we're like, not gonna give us any, until we go and sell it, but dang,
But when we go and sell it,
yep.
Actually, don't believe what I said, but I said it sounded like-
I knew that was what he said. Dang it. Credit, I really just know that finances are fluid, guys. There's no right or wrong way. Like, it's something that Trey and I talk a lot about. So you've got Dave Ramsey, which is debt-free, 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 don't have it. There's no such thing as good debt. And on the flip side, you've got Grant Cardone or Robert Kiyosaki, which is just buy good debt and make it happen. And that's why I'm a fan of Kiyosaki. The more debt I have, the better. The more good debt I have, the better. Neither one of them is wrong. I think it's very polarizing very quickly because some people are like, no. But so on the debt side, having money sitting in an account is stagnant. That's not working for you. For the last 6 years that I've been investing at a pretty good rate, at a pretty high level, stagnant money was something that I would avoid like the plague. And then I was reading a book and then talking to somebody else. And then he just goes, well, actually, having money in your bank account is the smartest thing you can do. I was like, that's so dumb to say. But go on. I'm here. I'm open. Let's play. And he basically said, well, the bank needs to see that you have reserves. The more reserves, the more cash on hand you have, the more money the bank will give you. So as long as it's in an account that the bank can see, the bank will give you more money. If you can use more of the bank's money than your money, why wouldn't you do that so you can do it that way? And I was like, oh my gosh.
It's a liquidity factor,
Mhm.
like a line of credit. If you want to increase that, you have to have money in there so that you can pay it.
Bit of equity, which I'm only saying that because there's no right or wrong way to do it. I would have never thought that somebody could say something and maybe go, oh, that might be correct. It's so opposite of what how it was.
If you ever want a fun evening of reading in your sport, go to a Dave Ramsey post and see all the comments of how people, what side they're on. Better than a political post, honestly. It's pretty fun.
It's wild.
It's pretty fun.
No, I wasn't going to. I'm going to. The Dave Ramsey side. If you don't want to spend a ton of time to learn about real estate investing or just investing, stay with the Dave Ramsey side. It is safe. The risk is low. It makes sense. And it's highly effective. If you want to learn and go fast, if you want speed, if you want to get somewhere very quickly, take the time to learn and really take the time to learn and then get into investing on that end. If you're willing to spend the time to educate yourself at a very high level, leverage is great. Otherwise, Dave Ramsey, debt free all the way. It's very safe and just risk. Pay yourself. We kind of talked about how much money you need to pay yourself. It goes back to the personal finance piece, which goes back to the car. You don't buy a car to buy gas. You don't start a business to make money. Where do you want to go personally? Your business should support you in getting there. How much money do you need to get there? That is how much you should pay yourself. And then you need to have reserves, or if you're comfortable with. I know somebody that has 2 years reserves. Wild. Dude, that's a lot. Quarterly versus yearly taxes. What would you like to say? Quarterly versus yearly taxes?
So I would think before I was a pretty big proponent of pay your quarterly taxes. But I think in Blake's example, and what I've learned within the last year, so when they go off your quarterly taxes, they base it off of your tax amount that you just filed and say, okay, next year, this is how much you need to pay in. And for me, and depending on the kind of person you are, you want to pay your taxes to make sure at the end of the year, you don't have a tax bill. So if you're not putting money aside, then that would be a way to do it. Now, if I overpay in taxes, and let's say I have more write-offs or deductions, and I overpaid, I'm not getting that money back. So I think it depends on you and your investing style of what that looks like, of whether you want to pay quarterly or versus yearly. Because we used to be quarterly, and now we're switching to just tell us at the very end of the year how much we owe you, and we'll write you a check for that because we're putting that in the account for it separately. However, if you need someone to help track or keep accountable to your taxes, quarterly taxes may be the way to go. I think it just depends on you and your personal preference.
Yeah. How much time are you spending figuring out your personal preferences? That stuff takes time. Takes time to sit down and say, would I rather be debt free or would I rather do the leverage piece? Because then you figure out, do I want to pay my taxes quarterly or do I want to pay them yearly? Understand, if you don't pay your taxes quarterly, there's a small fee. Just know, because the government wants you to pay money and they want money now. Okay. If you have the money at the end of the year, you're giving them exactly what they need. You're more in control of what's happening. And as a principal piece, I've never seen the government up until last year, I guess, or 2 years ago,
Yeah.
give me money for free.
Yep.
Because I know what the government's doing with the money. They're loaning it back out to other people or they're using it and I'm not getting anything for it. But once again, the safe, secure thing to do is pay your quarterly taxes. If the goal is speed and you want to get something done otherwise, or you want to spend the time to learn the pitfalls, the cons to paying them at the end of the year, take the time to do that. That is what most people, I think, are starting to kind of trend to do.
And talk with your bank to see what is the highest interest rate they can give you on that account. Because in your tax account, if you're building that money up over the year, you're going to earn interest off of it each year. So then you're receiving the benefit of building that up for the entire year or for the quarter. I mean, it's normally based per month, but the more money you have in there, the higher it will compound. So I would just ask to see, and I know even some banks may have like a VIP program or anything special, so you may get a higher percentage on that as well. So I would just talk to see what you can do for that.
Questions? How are we doing? Got about 20 minutes left. We all still there? Brain power wise? So 12 along. Okay. Who could tell me what a profit and loss does? A P&L, a cash flow statement.
So if you're wondering losing,
Actually using the terminology. What does that mean then?
just compares your finances, what you're bringing in, what's going out. So you could take all of your accounts, what your bookkeeper showing you, and it can show you, okay, you brought an X amount of dollars, what wide amount was paid out. Z is what the difference is between it, and you're hoping that's a positive number.
Yes, and really fast, the bookkeeper doesn't do that. The CFO does.
The CFO does.
Just because the bookkeeper just, no, you're good. I just wish somebody would have corrected me 2 years ago. Because I ran through the world thinking my bookkeeper was a CPA and my CPA was my CFO. And they're like, hey, how do I do it? Like, you tell me, dude. I don't know. That sucks. Because I don't know what that means.
And what kind of period does your income statement show for your P&L if you're winning or losing?
It would be monthly.
Right. Yep. Snapshot for the month.
And you can run a P&L monthly, quarterly, or you can customize it however you do. But if you're winning the majority of it, if you're winning the month, you're winning the year for sure. What about a balance sheet? Tell me what a balance sheet does. Who here has a balance sheet? This one got me jacked when I learned what a balance sheet was. So a balance sheet is your assets minus your liabilities equals your, any guesses? Net worth. What's your net worth? Why is your net worth important? I'm gonna make somebody guess on this one.
Why is it important?
Yeah, why is your net worth important?
That's another way to see if you're winning or losing. Are you picking up good assets? Are your assets doing what you would hope they did when you purchased them?
Do they outpace your liabilities?
Shows you people what you're worth.
Shows consistency over a period of time.
It shows if you're a good business owner or not. Because if you create businesses or you're an investor, or it shows that you can be profitable in the things that you do.
Tammy said credit worthiness.
Creditworthiness for sure. Because if you have more assets than you have liability, it's a positive number. If you haven't tracked your net worth yet, you should start. If it's negative, that's okay. But it is a very fun thing to track because as it goes up, because do you know how you become a millionaire?
Net worth.
It's $1 million in net worth. Doesn't have to be liquid cash. It is assets minus liabilities equals $1 million. And then you are a millionaire. That's the formula.
There's a certification you get for that, but after your name.
Yeah, actually you become an accredited investor. You can't be an accredited investor without having a net worth of at least $2 million.
Wow. We'll get you.
Yeah.
So in the perspective or the examples we talked about, you could have one rental property, which is your asset, and 7 cars that are fun. What's your net worth gonna be? Most likely negative, because that's a liability. Or you could have 10 rental properties and 1 really nice car. What's your net worth gonna be?
Pretty good.
Pretty good.
What's gonna make you money? Do you know how many streams of revenue it takes to become a millionaire? What they've said?
Right.
I've heard 7. Yeah.
It's not one.
Anything but one. Unless you just really, unless you hit it really hard on maybe like hand sanitizer in 2020, then maybe you could be on one.
Zoom.
Yeah.
Good job, you know.
Toilet paper, yeah, any of that.
Oh,
Yes.
Telethons,
Well, their
yeah.
stock has dropped.
Yeah, you had to
significantly.
sell it right whenever people started not getting sick.
But 7 streams of income. Don't have to be much.
Would one LLC that say has like 6 income or 6 rentals, whatever, is that 6 streams or 1 stream?
Ooh, so I love that question. And you may have a different answer than me.
I'm so excited.
To me, and I think I'm just how my brain operates. No, it doesn't matter if I have 1 door that's producing income or 20 doors that are producing income. To me, that's still 1 stream. Now, you could say each property performs differently, right? And that is different streams of income. I am just wired different, probably. And maybe I like to put my hands in too many different jars. But to me, I count that as 1 when we're doing our 7 streams. So Trey and I actually did an exercise. We did a brain jump of saying, in the next 5 years, what are businesses we could see ourselves being involved in? What excites us? What makes it fun? And from that, we said, okay, what are the streams that what are we doing now? And what are we seeing for future? So I am a market center administrator for here. I am a MAPS coach for MCAs and other Keller Williams offices. I am a regional MCA for the Mid-American and region, which is Indiana and Illinois. So those are 3 streams for me for income. And then I have our investment property, and Trey has his real estate business, and then whatever, and we have onward agent services, and so I like the difference of it. I don't count 1 rental property as 1 or as multiple stream.
We don't have.
Yeah.
So our rental property is the rentals. I break it down for tax purposes. So like in my head, if it is taxed the same, it just counts as 1. So all of my rental properties, that's 1 income stream. The sales from my real estate team is 2. My personal sales is 3. Property management is 4. So on and so forth. But they're all real estate related. The different sections. Yeah.
Would you have different LLCs for each of them? What about for the different rentals?
Personally, that is a CPA question right there. But I will answer the questions and not shy away from it. We don't. We have them all in the same LLC, and then we have an umbrella. So we have an umbrella with a lot of coverage on it. Because in most instances, if they're going to find a way to pierce the corporate veil, they'll find a way.
And there's some states that they have their holding company in a different state because from going from one state to the other, it's a lot more that they have to do in order to get that. So if I understood, I believe it's Tyler Richardson, their LLCs were originally here, but then they're holding companies in Kansas because those laws are different. So if someone wanted to sue for that, it's more hoops to jump through. So that's where looking at different tax laws in different states would be very beneficial.
You just have to keep track of all the things.
Mhm.
And so when it comes to filing, when it comes to all the business stuff, it's just mostly keep track of. I'm a simpleton, so I'm like, no, I think like 1 thing to track.
Or you see Zach Riggs with 7 checkbooks that he walks around with, which I love because he has multiple LLCs. I've heard, and again, everything's different. I've heard normally if it's about $1 million to $2 million, then you want to go into your next LLC or the property values. So we've talked about separating those out a little bit more. But again, that's different bank accounts, different books, all of that, or a holding company to put it all in one.
Financial advisors they actually hold a lot of value. When you look at everything in its whole.
Do you have a certain point in your net worth that you would recommend getting a financial advisor, or would you recommend getting it as soon as you can afford it?
I've had a financial advisor for even before I started KW. That's when I was doing a Roth IRA and maxing that out. And I don't think I would have, and at that point I was making $32,000. And I saw the value in it. So I would say it matters of who you're in business with and what relationship you have with that person. And if you have that relationship, why not? And that's my opinion.
I've been my own financial advisor for the past while. Because something to really keep in mind with like the 401ks, and we're diving a little bit into wealth building stuff, but all of that was created to get you to reinvest in the stock market after it crashed. And we can Google this because I'm not making it up. I think your 401k was recreated one was 1978 and Social Security was created in 1998. Real estate investing goes back to the 70s. So if you want to kind of be like shocked a little bit, walk into a financial institution of any kind, and it's life insurance. Here's ways to invest, stock. Here's ways to invest. Here you should do these things, and then you ask them how it stacks up against real estate, or how does it, and they don't understand how it functions or what it does. It's not what they're trained in. So because real estate was what I decided to get into, I've had to become a financial advisor. Now, estate planning is something you should do just immediately. I wish that we would have gone back in, because when you're taking title on things, when you're buying things, the transfers on debt, like TODs, like all of those things, that's super, super important. And we didn't do that. But if I was to get into stocks or anything else, I would absolutely get a financial advisor, because I'm not going to spend the time to understand stocks. Real estate, though, I'm managing my own finances, which is a beautiful pro and con of like all the success is really cool because it's mine. All the failures is also there. If that makes sense.
And mine is only for my Roth, which I don't use anymore because I'd rather put the money in real estate investing. I don't know stocks, right? I don't know that. That's not my daily life. I know real estate and I know real estate investing. So I'm going to put my money where I know and I have a little bit more control over versus the stock market. I'm just like, here you go. One thing that you did say, again, not even more wealth building, a hack around real estate investing that Trey and I just took advantage of. So have you ever heard of the step-up basis? So what happens with that is, let's say your parents have a property and after they pass, you want to inherit the property. You can give yourself like a beneficiary designation of that, saying that you're going to inherit the property after they pass. When they pass and you inherit the property, you don't have to pay taxes on it. So you could go and sell that and you wouldn't have to pay any sort of tax gain on it. So if you know of anybody, and talking about estate planning, loved ones in your life, and you're going to inherit that, make sure you have that documentation in place that you can inherit the property, because then you could use that as investment property, or then you could sell it and then you could take that money and go and do something else. So my parents are retired, Social Security, it's all that very minimum. And so we bought my parents a duplex, but we bought it in their names. We gifted them the money for the down payment, because there's a certain amount you can give per year before they have to pay taxes on it. And the property's in their names, but we did a beneficiary designation. So when they pass, we inherit the property. So now we have this investment property that we can use to sell or continue to rent out. And whatever money we make off of it, we don't have to pay any tax on. But we have to make sure you have the designation in place so you can inherit the property so it doesn't go through probate.
Beneficiary.
Yeah, so and if you're going to do,
my mom was in the process of buying her.
if you're going to do it, please talk to me, because it was a learning thing, all of that. Because at first we were trying to get an LLC, we had issues getting their EIN, and had to go to the personal name, all of that. It was a beneficiary designation, and so we went through with a local attorney here in town. They drew up the paperwork, got it notarized, and so then after they passed, then me and my sister and I inherit the property. She's also in real estate. And so then you can take that and you don't have to pay capital gains or any sort of tax on it to the government. You can sell it and make all the money you want, or keep it as an investment property and it's yours. And that property, for as long as it's continued or designated, you never have to pay. Just like when you sell real estate, you 1031 the money, you're avoiding taxes that way.
But that's just deferring them. Sorry.
No,
The
step up basis, you do not.
Like step up is not,
But the 1031 would be a deferment.
is deferring, and but there's still ways.
Yeah, can't you put it in like your kids' name?
Okay, Hannah, before you leave really quick, let me make sure. You get this.
Oh, no.
There you go.
What is happening?
Oh, there it is. Okay. This is a feedback. Please give us feedback. No, I don't, this gives us ideas for next time. And if this is even something you guys would want in the future, so don't leave Hannah.
175. I'm just kidding.
And everybody online too.
I see. We know you're there. We got 10 minutes left. Please make sure you know if you're winning or losing. That's the biggest thing for me. Please, please, please. What feedback do you guys have? Which part was the most enjoyable? Which part was the most miserable? What did we like? Takeaways, ahas, we hate to use.
I kind of have a comment on, said it along back at the beginning of the class, about just knowing your financial status kind of frees you up to other things. Personally relate to that when at the end of last year, I finally got on board with running the finances of the business. Didn't even realize how much that was stressing me out until we kind of got the system down, figured it all out, and provided that clarity, which then in turn freed me up to really focus more on my role. Had a big trickle down effect into other areas of my life. Didn't even realize how much energy was going into this pit of ignorance. So it can be very powerful just to enlighten yourself.
I think it's really great that you guys talked about having a personal budget. I didn't have a personal budget until I missed a credit card payment and it bounced and I didn't realize it. And then I looked at my credit score through Credit Karma and it had just dropped 70 points. I'm like, there's 3 years of grinding gone. So then now every month I have exactly what date, how much is it on auto pay? If not, how do I pay it? And so every month, once a week, I'll look at my spreadsheet, and it's very simple. I mean, I don't have any commands besides just adding up what my monthly bills are, and so I know. Okay, so I want to get like I recently got a consolidation loan that paid off 3 other loans and dropped my monthly net by $200 or $300. And while it's not big, it's nice to see. Okay, well, that's less money that I need to make.
$300 is big.
And then I'm starting to create passive income through things I do every day. And so that's another, like all of a sudden I have a $800 swing in my balances.
Feels really nice. You're winning.
It feels really nice because it's like another step closer. It's like now I can afford to quit Chase, so I can really focus on my bills. I can afford gold and I can afford these things. So.
Christina?
The profit first breakdown, that was really helpful because I'm getting ready to get my first commission and I had no idea how I was going to break any of that down for taxes and stuff. So that was very, very helpful.
Very cool. Take away.
I would say going over the categorizing expenses and just kind of being aware of your finances, what's coming in and out. I mean, very good stuff.
Jonathan?
You got any feedback for us, man?
I would have to say like the percentages as far as the profit, the expenses, all that type of stuff.
Cool.
The taxes are a big thing. You know, making sure you have enough at the end of the year for the taxes or quarterly, however you want to do it.
Yeah, dope. Evan? I said there was one more. Forgot you were over there.
I'm sorry, I'm not a person. I don't know, I've been, when you join this team, this is something that you run, so I've been doing this for a while, but I still got quite a few things out of it, and I think more than anything, I just want to tell you guys that it is hard to set it up, and it's even more difficult to actually start following it, I think. For the first while, I had it all set up, and I was like, no, I got paid. I'm just taking this. But once you actually start using it, it just makes things so much easier to paying yourself a set amount is what changes everything. Because then you just know what you're gonna make each time, as long as you continue to produce the way you're gonna produce, so. No, you guys do great.
So the book Profit First is by Mike Michalowicz. But Blake found this book on Amazon and I just got it in, so I can't wait to read it, but it's Profit First for Real Estate Agents. And I bought it on Amazon, it was like $12, it's actually on sale. So, but this is gonna break down, it says, if you can calculate a house commission in your head, you have the math skills to master your money. This book is the missing link you've been looking for. So, the easy button for real estate earnings. So this could be a book that you look at getting if you want to combine the book Profit First with actually within real estate. So.
Just Profit First, the original book is more so just somebody gets paid bi-weekly. So it took some finagling on my end. I haven't read this book yet, but I guarantee you it's gonna be better than whatever I've puddled together over the past like year. But I'll be reading it soon. It's really good.
And there's graphs, demonstrations, examples, and actually a plan of how to work through it at the very end. So create your own Profit First timeline. So just a thought, it's on sale. Got it last on Friday. So
Let's see.
Tammy or Christy, do you guys have any ahas or takeaways? No, it already jumped off.
I did come up with one thing while we're waiting on her.
Yeah, go ahead.
Just for next time-ish, maybe, coming up with a way to try to plan with, like you said, like with you, if you're not capped, that 6,000 is not gonna be 6,000. I don't know if there's a way to do it, but to maybe plan for being uncapped and then to being capped and.
Yeah, we could walk
making
through
that
what a
work.
commission percentage would be and then how much your split would be. And then we could take it and put it into the Profit First. Yeah, that's great feedback. Love that.
And just to kind of piggyback off of that, same with like leveraging, what that would look like with those 33, 56, transactions, how you can do that as a solo agent using leverage and rough costs, things like that.
Love that. Well, we will have the business planning clinic in October, beginning of October. And that is a yearly thing that we do every year, and it will cover the different models within the MREA. And one of those is the organizational model. So that would, there's 7 different levels within the MREA for your team. So that could be something we could tie in after that.
Yeah, for sure.
Right after that. Okay. Christy, love the breakdown. The last bit was overwhelming when you haven't got your life to that point.
For sure.
Ain't nobody got their life to that point.
No worries.
Love that, Christy. Cool. Well, thank you guys for being here. Yep. Yep. And if you have any other feedback, please call the survey. So. Yeah.
So we know.
Thanks for spending 2 hours with us. Maybe we get one for.
I know. Why? Huh? Why? Our lives are having fun. That's right.
So you're saying.
Yeah.
Overthinking their expenses and under planning your income. So if there is, you're gonna have less and pay more. Estimate high, for sure.
Just like, so that makes a ton of sense. So we matched our personal had to put anything to our budget for the first 3 months. Yeah. That was a very real.